Good morning, everybody. Hope you're all enjoying Dublin, those of you that are visiting. This morning, I'd just like to take the opportunity to present to you the Aviation Industry Leaders Report. What we're going to do, or what we tried to do with this report in conjunction with Airline Economics, was rather than relying on an online survey to generate the maximum number of answers to a number of questions, to focus on personally interviewing the industry leaders across the various segments of our industry. So between October and December of last year, we conducted in-person, in-depth interviews with 40 senior people from the leasing companies, the banks and the airlines. About 20 of these were interviewed at various airline economic events, and what we're going to try to do today is give you a flavour of some of those interviews by including excerpts from those discussions as part of this presentation. Maybe before I start, just obviously to thank those people who participated in the survey. Their giving of their time, I think, has allowed us to provide what is a very unique insight into the top-of-mind issues that they're dealing with in their leadership of this sector. As I mentioned previously, the interviews were conducted between October and December last year, so obviously events have transpired. People's views may have been more informed, evolved, or indeed changed since then. So take that caveat as you will. And also remember that the excerpts here are coming from much broader and more holistic discussions that we've had with these senior executives. So please don't take anything out of context. The interviews will be published online from Airline Economics website later this month, and I would encourage you maybe at that point in time to go and have a look at the more fuller discussions that were undertaken. So I suppose as an introduction, and I suppose to where we are, we've seen 2017 was another extraordinary year for the aviation sector in, I suppose, what was a long line of very successful years. Supported by low interest rates and low fuel prices, airlines have continued to post profits, the third year in a row, which is, I think, an almost unique factor from an IATA Airlines perspective. And the airlines themselves, I think, have judiciously managed capacity, which is reflected in an RPK growth rate that is in excess of the 10-year long-term trend of about 5.5%. which at the same time have managed to increase their load factors. So all positives there. Again, not to be left behind, I think we're seeing the leasing companies have continued to grow. An interesting fact that we're seeing coming out from this survey is that in the 2 years between 2015 and 2017, the number of leasing companies with $1 billion of assets has grown from 33 to 50. And the number of leasing companies with assets in excess of $10 billion has nearly doubled from the 5 that was there in 2015 to just below 10 in 2017. So significant amount of growth across all the sectors there, and particularly within the size of the leasing sector. Again, not to be outdone, the capital markets and the financing sectors have remained open, and we've seen more investors and more institutions coming into the sector, searching for attractive yields and stable returns. And again, I suppose, commentary from the participants is that while that liquidity has been welcomed, what it has done is drive down pricing on aviation financing transactions, which is somewhat reflective of the maturity of the sector and that level of competition for financing transactions. So this slide just gives you a brief overview of, I suppose, the key themes that were addressed across each of the sectors or the segments within the survey. I'm not going to get a chance to go through all of these across all of the segments today. Really what we're going to try and do is give you a little bit of a flavour for some of the key things, and I think they segue nicely into what Helene has just talked about from the airlines perspective, and what you're going to hear from the airlines panel, or the lessors panel after this, and the financing panels later on today. But again, you can see some consistency of themes across what the various participants are focused on. In terms of the regional outlook, I suppose, not surprisingly and not unknown to everybody in this room, aviation finance and aircraft leasing is a global industry. Lessors place their aircraft with lessees around the world, and while they tend to be focused more on individual airline credit risk, there are views in terms of regional risk and regional exposures, and the same thing comes from the global aviation banks, who again operate across the globe but do have views and do monitor that exposure across the sector. Airlines that were surveyed and that we discussed this with, again, tend to be more focused and tend to generate their level of optimism from their home markets and the area, the geographical area that's covered by their route networks. On an overall level, I think what you find is that the level of optimism for regional growth by lessors, airlines and banks is consistent. I think no surprises in terms of where most opportunities are seen and where the least opportunities are. There is a table included on page 9 of the report which shows you the level of grading in terms of where people see the optimism from. Primarily that's coming from expected growth in China, India, Asia Pacific, and then Europe, North America as the main areas of focus. I think we'll try technology for the first time now. We've 2 brief videos from John Pluger, and the CEO of Air Lease Corporation, and Peter Barrett from SNBC, just talking a little bit about the geographical outlook and maybe a quick trip around the world in 2 or 3 minutes. So maybe if you could roll the first 2 or the first video clip, please.
Over the next year and the regions, where do you see areas of growth? Where do you see areas of stress?
Sure. Well, I think Asia will continue to be an area of growth. Right now, about 44% of our whole business is in Asia, and of that, about half is in China. And that I see continuing. We're also seeing a bit more growth and strength in Eastern Europe, and in fact, actually in Russia, where we've enjoyed some recent placements. Europe actually continues to grow quite stably in terms of its leasing and aircraft requirements. But I would say Eastern Europe and Russia is more of a bright spot than I would have thought a year ago. And I think it will be the same going forward. The Middle East, everybody is concerned, I think, about the wide body, call it saturation there. And I think that to some extent that's true. I would not be surprised to see continued deferrals of wide body orders from some or all of the major 3 Middle Eastern carriers there. At the same time, we've seen growth in the low-cost segment now in the Middle East as well, and I think that will continue, as it is really continuing globally. Asia, South America, for example, we're seeing now an overall recovery in Latin and South America. That market is dominated, of course, by Brazil, which is so huge and pervasive.
Across the various geographies, where you see areas of opportunity, where you see potential areas of stress?
I mean, I think I've been saying for the last while. I mean, I think we're in a pretty benign, stable environment for the last while. I mean, there's been bumps along the way. We've seen some problems with the European airlines, for example, Monarch and others. I think that's kind of actually pretty healthy, because I think it's sorting the wheat from the chaff, and I think it's a sign of the recovery and the strength of the European market. Obviously, the Middle East has a pretty tough time, but generally we see the market as being pretty stable. We've seen a very strong recovery in Latin America. We're very positive on that at the moment, particularly Brazil has done well. Russia's had a tough couple of years, but again, we've kind of picked our fights in Russia. We've a couple of really good customers there, people like Aeroflot, S7, Ural, and they've come through it, through the difficulties there. So generally, we see a reasonably stable environment around the world. I mean, clearly, there are markets that I think are going to be more vulnerable, particularly as interest rates change, and you're going to get, the corresponding challenges in terms of people who borrowed in dollars, and potentially some challenges on the FX side. But generally, there's no particular region I would say today, I'm really worried about that, or indeed a region where we'd say, look, we think everything is perfect here, because no market is perfect.
Okay. Maybe just to move on in terms of going into the first of the kind of the sub-segments that we talked to. From the lessor's perspective, at a very macro level, I think what we saw from talking to the people in that sector is that there continues to be a bullish sentiment towards demand for aircraft and the relative health of airlines around the world. That despite the airline bankruptcies that we've seen here in Europe in 2017 and the impact of other areas of stress around the world, whether that be caused by war, terrorism, sanctions or other regulatory pressures. Generally, we found leasing executives would agree that I suppose the positive environment that we've operated in the past while in terms of low interest rates, low oil prices, has endured for what would be a considerably longer period of time than we might have experienced in the past. We've seen RPK growth in excess of kind of long-term trends in what would normally be considered a suboptimal GDP environment. And that, I think, is indicative of the robustness and the strength of the sector and the ability to endure the cycles. And also, I suppose, very supportive of the fact that we've seen that growth rate support be at a sustainable level to support the replacement of older aircraft and the new aircraft coming into the market. So again, all very positive there. The airline industry continues to remain very positive, very profitable. Colin Barrington, CEO of Fly Leasing, and the Vice Chairman of Finnair pointed in particular to the record load factors being achieved by IATA Airlines and the low-cost carriers that sit outside that reporting framework as being a very positive factor. I think, as Colin put it, high load factors mean growing demand for aircraft, and growing demand for aircraft is obviously very good for lessors. So a very positive picture there, I think, generally all around from the lessors. Notwithstanding that, I think there were comments that people do continue and will continue to monitor such things as the OEM production rates, with particular concerns around the impact that would have on residual values and overcapacity in the market. Again, commentary that we've seen from people would suggest that that benign environment that we've operated in, or that people would describe as being benign for the last couple of years, has supported and allowed more leasing companies, or certainly the leasing sector, to flourish, with significant amounts of new capital coming into the sector, most notably from China and Asia. And that capital, I suppose, has been attracted by the demand that's out there for strong and stable returns, which it is generally possible to achieve in a well-managed aircraft environment or leasing environment. As an example, I think Peter Zhang, who's the president and CEO of CDB Leasing, who's on the panel later on today, pointed out that 10 years ago, the operating lease fleet stood at around 4,000 aircraft. Today, it stands somewhere closer to the region of 10,000 aircraft, which is a significant growth in anybody's terms. Another interesting factor that came out from discussions, this one being noted from Gus Kelly from AirCap, is an increasing demand for used aircraft. Historically, that demand has been concentrated in the US and with US airlines, but they're seeing more and more of the demand for used aircraft in places such as Europe and as far away as Poland, Hungary, Turkey, parts of North Africa and the Middle East. So an interesting trend there in terms of it's not just new aircraft that are going to be leased, and also one that demonstrates the need for what I think Bob Martin from BOC described as the leasing market ecosystem, where we now have an industry that's segmented into the large new aircraft, midlife and end-of-life players, which are all vital to that health of the sector and that ecosystem. So generally, very positive picture from the lessors. In terms of a couple of the other themes that were coming out in that, there was a question posed, and most of you who've been at these conferences before will know it's a stock question as to where are we in the cycle, and is there still a cycle that's been going on here? So I think generally most of the CEOs that we spoke to and the senior executives did indicate that there was what we are experiencing is an extended peak. The industry continues to be cyclical and is expected to remain so, but we are experiencing what was described as that extended peak. However, as is usual, I suppose nobody is prepared to be drawn on whether or not we have reached the peak, whether we have passed it, or whether we are approaching it. Although there was, I suppose, a general acknowledgement that we are somewhat near the zenith, depending on which side you may see that we're sitting on. So I think quite a lot coming out from there. I suppose the market splits somewhat between the bulls and the bears. Some of the comments that you'll see in the report and are worth reading around the extent of growth continuing but not being endless. I think there was a comment that it feels somewhat like 1998 all over again. That positivity being supported by what was described as the wall of liquidity that's supporting the growth in the sector. And that was explained, Bob Martin from BOC, that what we're seeing is fund managers investing more and more money in the aircraft leasing sector, in particular because of what's been perceived as the relatively low default rate by lessors, the stable returns that can be achieved in what's an otherwise low yield environment. And that is supported, in his view, certainly by large leasing companies allowing for diversification of risk. And that brings with it an element of credit strength, so long as there is a focus on risk management within the organisation. Now, not everybody is bullish. I think Can Tran from ACG provided somewhat of a more bearish view on the market in terms of what he described as the current triple L environment, where we've operated with lackluster growth, lame interest rates, and that luring people into a period of complacency. What we might do is, again, we'll skip to the video of Can, and maybe you can get his views directly from him. So if you could run the
End cycle coming.
Do I see an end cycle?
A down cycle.
A down cycle. Well, yes. Well, yes. The short answer is yes. What's interesting is this cycle has lasted longer, not just in our space, but in globally in general. Yeah. The big question will be, when will rates rise? I think oil, it'd be tough to see oil rising, spiking, except for event risks, North Korea or what have you. I think that the cycle is coming in the sense that even if we're in the triple L cycle here, lackluster and lame in terms of growth and economic robustness, there's an overcapacity.
So I think, again, what's interesting to note is there that while Can noted that, you do have those what may be perceived as more negative or more bearish views, he did, I suppose, indicate that those do provide opportunities for growth, but in particular, primarily for those who have equity to invest and expertise in operating through the down cycle, which I think is a common theme that we found for talking to a lot of the lessors, in that, in order to work through whatever down cycle or downturn is coming, you need that expertise and you need experience, and that's where, as we see when we talk about M&A in a few minutes, that's where people are going to see some blood on the streets, as one person described it. One other video that we'll show in a second is discussion with David Power, who's the CEO of Oryx Aviation. David provides an argument that he uses within Oryx for taking a holistic view of the market, which can often provide a more different view than might be painted from just looking at purely macroeconomic factors and different things across the leasing sector that are worth talking to. So again, rather than maybe repeating those, if we can run the video of David and we can talk to things after that.
There's a lot of talk about where we are in the cycle. The macro would suggest there's a lot more to go. Where do you think we are? Do you think we're at the peak?
Well, you could say we're in a long peak of a cycle.
Yeah.
But the macro is only one part of it. Don't forget, we look at supply, demand, and liquidity. And you also need to look at the structure of the companies involved in aircraft leasing and financing, and then you can paint quite a different picture. So you need to be able to both transit aircraft deliveries and redeliveries, market them, sell them, lease them. You need a liquid market for aircraft transfers. We've currently bottlenecks in the novation market. We have differences between financiers as to what they require. We have the capital markets, which are quite active. We have an increasing interest rate environment announced by the Fed last night. I think it's 3 rate rises in 2018. So you can't just look at the macro and say all is rosy. You have to look at the various markets which influence aircraft leasing. And they really are going to be the demand for aircraft, the creditworthiness of the airlines, the capital markets, the banking market, the amount of liquidity, and people's return expectations. And at certain points in the cycle, they all change. Sometimes they interact together, and sometimes they interact quite differently. So I wouldn't get too excited just on the macro itself, because we have to get the other conditions right as well.
Yeah,
but I think it's the starting point.
Yeah,
sure.
it is.
Okay, and I think that's generally seems to be a theme that, across a lot of the experts you're going to see, a lot of the senior people that we talk to, when you talk about these individual issues, would comment, you can't just look at these in isolation. There is a much bigger holistic or macro picture that you've got to take into account. It's not just the economic factors, it's not just the growth within the sector. There's a lot more that drives this space. That being said, one of the key things, and I think one of the cornerstones of this sector has been the relationship between RPK and GDP growth. I suspect if you took a show of hands, there mightn't be anybody in the room who hasn't seen or hasn't been involved in preparing an investment or a credit proposal that has talked to this relationship as being a cornerstone of investing in or lending into this sector. However, one of the things that has come up quite consistently in the last couple of years in discussion has been, well, has that benign environment that we've been operating in, or has there been a decoupling of that relationship for better or for worse in terms of where we're at? And in particular, when you look at the growth in air transport and the metrics associated with that. The graphs over here are repeated in the report, so I'm not going to go into them in a huge amount of detail, but the top one is the historical overall trend in terms of RPK growth and GDP growth. And you can see up until about here in 2014, there's a very consistent correlation between the two. The same thing happens down here in terms of the advanced economies, and the same thing almost down here in terms of the emerging and developing economies. There's a consistent correlation, which then generally decouples more in the advanced and emerging economies. And I think I would point you to the report in particular. I think it was page 9 of the report. There are certain metrics that David Power comments on in relation to the level of frequency of travel, particularly in China and emerging markets, which was driving this decoupling, and which may continue for a couple of years and into the future, and actually break that historical trend on an overall basis. However, I think when we spoke to most people, there was an agreement that, notwithstanding what we might see as an element of decoupling here, that link between GDP growth and air travel will continue. We may see changes in those ratios as we have here over shorter periods of time, or on a regional by regional basis. So there may not be the same correlation between RPK growth and GDP growth on an overall basis as there is across the different sectors, or as there may have been in the years to date. And I think, again, consistent with the message that we saw from David, and what we're going to see now from Ruth Kelly in Goshawk, is that you've got to look at more than just this one factor. There's a lot more to this, and again, I would point to, when these interviews are made available online, it's worth looking at the broader discussion in terms of getting the complete view. One of the other points that Ruth made, which may not be in the discussion here, was there are additional factors may have driven certain of these. Airline consolidation may have driven more airline efficiency, which means that it's not just the underlying GDP growth that is helping with RPK growth. Airlines have been able to create some of that through their own efficiencies and growing capacity that way. Notwithstanding all of that, I think the overall conclusion was there is going to continue to be this correlation. I think there just needs to be an element of caution in terms of whether you're looking at the overall picture or whether you need to drill down into a more nuanced view on a regional or a sectoral basis in terms of looking at that. With that, maybe if we run the video from Ruth Kelly just to give that overview on this topic.
I don't think so long term. I mean, I think our industry has been through a lot of change, that maybe the ratios have changed a little bit in the medium short term. I mean, GDP growth has been benign in sort of our part of the Western world. It certainly hasn't been in Asia. And, China would have seen double GDP growth at points, as would India. And that's where we're seeing all the growth in air travel, really. We're not seeing huge growth in the Western world. So I see that pattern continue. But the big changes, I would say, that we've seen probably in the Western world is airlines have become more efficient. They've restructured themselves, they've become cost efficient, which means they're able to offer their product at a lower price, which means that kind of kicks on demand a little bit. If you just look at price elasticity of demand. Perhaps a lot of that work is now done in the Western world. Perhaps the last 15 years saw that restructure take place, and we'll see those kind of patterns return to normal. So I don't particularly see a decoupling. When you kind of break it down, there are reasons for it.
Okay, my clock is turning orange here, so I think I need to gallop along through the next couple. I think I referred previously to the general trend and the shift in the size of the operating lessors with a trend towards upscaling, and that fact in itself, I suppose, has driven an element of M&A activity in the sector. That M&A activity, or that growth, I suppose we've seen in terms of two two elements. One is the outright M&A that everybody be familiar with in terms of acquisitions and joining together of organizations. The new trend that we're seeing is obviously in terms of the use of JVs and sidecars as a means of growing scale without necessarily putting on the balance sheet and leveraging the capacity that may be within in Lessor's platforms. I think generally what we're seing, and commentary coming back from some of the participants, is that scale is now seen as a critical comparative advantage, which is one of the reasons why this sector is growing so fast. What we might do is run the first of two videos on this one, which is from Killian Croke, who's Head of Aviation Finance in Standard Chartered and CEO of Pembroke. So you just run that.
These joint investment arrangements as being something that will grow in popularity, or do you see more consolidation and scaling up of the existing platforms?
I think you'll see a bit of both. I think in our case, a lot of the clients of the bank are private equity funds, hedge funds, sovereign wealth funds. Many of them are studying, evaluating the aviation sector to see whether they should be participating in it. So I think you'll still see new capital coming into the sector. I think you'll see some of the new entrants over the last few years realize that it's difficult to build out your existing platform. And they will recognize that you do need to have the global reach that I talked about earlier. And I think one way of doing that to get scale, but also to build your technical and marketing infrastructure, is to acquire another entity. But with M&A activity, there's challenges to that as well, with integration and chemistry and synergies, etc. And so I think you'll see a bit of both. I think you'll see some further consolidation, but I also think you'll see a lot of new capital coming into the sector. We're seeing, as I said, pension funds, life assurance companies, sovereign wealth funds, all looking to, well, certainly evaluate the sector and possibly participate in it.
Okay. I'm running over a bit of time here. I think I started a bit late, so I'll take 2 minutes and finish just to try and keep us on track and maybe skip through some of the other slides. I suppose in terms of M&A, given the topicality of the issue, I think the consensus certainly among a lot of the lessor community that we spoke to is that this is part of the natural flow of the industry, which contracts and expands depending on market forces. And for those of you who didn't think M&A was a big factor within the leasing sector, I think this slide, which I've borrowed from an Avalon presentation at an earlier or another event, demonstrates just some of the more milestone transactions that have happened from an M&A perspective in the leasing sector over the past 20 or 30 years. So it's not a new concept here, and I think it's expected to continue, but maybe not on the scale that we've seen in the past couple of years, unless there are events or actions that are going to present those opportunities. I think we've seen comments from some people that would suggest that, when this downturn comes or when the next downturn comes, it is going to result in what one participant in the sector described as blood on the street, and in particular with that targeting new entrants who haven't had the experience of managing through a pronounced down cycle or stressed environment, and that's going to have a big impact on those participants. Peter Huber, who's the CEO of CALS Aviation in China, made an interesting point that there are currently, I think, 100 Chinese operating lease companies, with 15 that he would describe as really in the business, which means that there are potentially 85 that need to find a purpose or find a home, and that presents opportunities for M&A in China. I think one of the things that'd be interesting to watch, will we see any sort of inbound M&A from Western or non-Chinese lessors into that market, and almost a reverse of what we've seen for the past couple of years. I'm going to finish now maybe with the video from Gus Kelly that talks a little bit about M&A. I've run out of time, so I'm not going to talk about the airline or the financier comments that were on the last couple of slides. The slides are available, and I think the comments relate to what's in, as Martin said, that report. There are more copies of this being printed and will be delivered to the venue here later on today if you haven't had them. So finally, just to finish, we go to Gus to thank everybody for participating. I will leave the questions and the tricky comments for the people who are coming on the panels after this, who I think are probably more expertised to answer it than I am. And maybe if we finish, we'll run the last video from Gus, just talking a little bit about some of the M&A potential for the leasing sector.
And do you think there's any particular trigger that might drive that sort of weeding out of the winners and the losers and opportunities for consolidation. Do you think the interest rate environment increasing over the next while, do you think there's going to be something else that might create that environment where M&A activity may, present opportunity?
I think in the near term, look, if there is, say some volatility in the airline business, say oil goes up, you're going to have a few airlines struggle a bit. That will mean that some of the people who recently come to the sale-leaseback market with no platform and no experience will say, hold on, I thought these guys always, performed. But, you have to have a platform behind you to manage that. And those risks become that much more amplified in a small portfolio, where if you've got, say, 30 or 40 airplanes and 5 or 6 with one guy, and he gets into trouble, the owner of that platform is like, wow, that wasn't part of my plan, but that's inevitable. And so I think, things like that, you'll see some guys probably, that's the kind of tourist money at the first sign of trouble, they'll be gone. But I think a rise in interest rates, if other asset classes become more attractive, that will drag some money out. But I think a lot of the money might be here to stay as well, For any significant M&A, I suspect it's going to have to be some issues with the parents before, like we've seen in the past. That's what always really triggered it in the past, be it our own experiences or other experiences. That's generally what's led to it. If you look at RBS, CIT, AIG, ourselves, going back to Debus, it's been when M&A really gets triggered when the parent has some issues.
Great. Thank you very much. Enjoy your day.